High yield bonds are confirming stocks' new all-time highs, and I will explain why that is important. Dollar continues to weaken, and this is helping gold and gold miners, which have hit an all-time high. Interest rates, very interesting. They have taken a dive recently. Especially important is the long-dated Treasuries, the fund name ticker TLT. I'll explain why that is important. And at the end, please stay tuned. We will discuss the recent trade example for Google as it broke to new all-time highs and subscribers are up over 27%. All this and more in today's edition of MasterChartsTrading.com. A market recap for Friday, September 5th, 2025. As always, please remember to share, like, comment this video. Even if you put a little heart or thumbs up in the comment section, that is already very helpful. So thank you very much for that. And if you're a subscriber, stay tuned. We'll be covering various securities such as market breadth, crude oil, some of the forex products, as well as ETFs, including cannabis and psychedelics ETF. We will cover some of the large cap stocks, some of the speculative securities. Some of the interesting names are Lyft, American Battery Company, Editas Medicine. So stay tuned for that. And at the end, we'll cover three more cannabis and psychedelic related stocks: Aurora Cannabis, GrowGeneration, and MindMed. All right, let's get to it. S&P 500 once again has made a new record. There is a new record. We can look on the 4-hour chart to see what the price action is like. So this is a ticker symbol US 500 from Capital.com. It's a continuous derivative of S&P 500 futures. So basically we're looking at continuous futures for the S&P 500. And very recently, today is September 5th, this week, basically at the beginning of the week, September 1st, we saw a drop towards this blue support resistance line. Now remember, this is a 4-hour chart. So each candlestick is only 4 hours worth of activity. And notice what happened. We dropped towards this blue support resistance line, and then we have a signal to buy. What is a signal to buy? Signal to buy is a close above the blue line once we saw a low below the blue line. And now we see a new leg higher with new all-time highs. So that's a basic understanding of how continuous securities can be traded on shorter time frame. Normally we trade on daily, so this is a daily time frame. Each candlestick is a day's worth of activity for S&P 500. But if you are a very short-term sort of trader, you can look for opportunities in continuous securities, such as this US 500 from Capital.com, which is a equivalent of a futures trading. Unfortunately, this particular security is not available in the United States. But you know, we can still get some good information from it. So similar situation just occurred back in late August, when the security dropped towards the blue line, and then the close above it, right there where I'm hovering on 25th of August, is what was the trigger to buy. And so basically this continues until it stops, happening. For now, I see record highs for S&P 500. Additionally, I see record highs for high yield bonds, JNK, ticker symbol JNK. Why is it important to have high yield bonds walk together, or move together in lockstep with S&P? Is this chart is important. This is high yield bonds JNK on weekly time frame, so long-term chart, 1 week worth of activity. Down below here again is a correlation coefficient to the S&P 500. So how much does high yield bond do the same thing as S&P 500? You can see they're pretty much doing the same thing most of the time. with an occasional foray into negative territory when they're doing something different. But as of late, they've been doing very much the same thing, 93% degree of correlation between S&P and high yield bonds. So good news once again, because S&P has hit records together with high yield bonds. There is no divergence. Important information. If there was divergence, then we would start to worry, but we did not see a divergence, so we are not yet worried about the fate of the stock market. I still think that we will continue making records. Obviously, we could get a small pullback, but even a relatively large pullback, as in, for example, where I would get interested towards the blue support resistance line, that is still about 9% pullback towards a level where I become very interested. So that's the same thing as I just showed on the 4-hour chart. So same thing, we pull back towards the blue line, we buy after this low below the blue line, close above the blue line. You can find out more about these indicators by going to the description. On daily charts, same thing. We need to get a pullback towards the blue line and then a low below the blue line and a close above it. So right now we're at record highs. We're pretty far away from the blue line. We need to wait 9% pullback for S&P 500 to become of interest to us. Right now it's just holding. We're basically holding. Like, for example, I have still have QQQ, the Nasdaq 100 that I bought back in May of this year, and I'm still holding. I'm still holding this full position, and I'm up about 20%, so I'm not complaining. I'm still sitting in the position. Why? Because there was no pullback. There was no need for exiting of the position. So we're just going to continue holding for now. Switching gears, we're looking at dollar currency index, DXY. So dollar currency index is in a downtrend because multiple issues. Biggest one is just looking at this chart using my indicators. You can see that we saw a breakdown where I'm hovering on the 7th of March. That's the entry of the security into a downtrend, into a bear market. We saw several lows, and this is a multi-year low here on July 1st. Small feeble bounce that I thought were going to carry us to the red line. It didn't. It only carried us slightly above this yellow support resistance line. Why did I care about the red line? Because if it got to the red line from the recent lows, then it would have been another opportunity to sell it short. It didn't happen even, so there was so much weakness in the dollar. So right now we are seeing a potential. So this is actually a low, lowest level since July, end of July. And we're looking right now at this level from July 24 of this year, 2025, July 24th level of if the security of this dollar currency index breaks below this July 24th level, then most likely we'll see a new multi-year low, because most likely these lows will be taken out from July 1st. So it's really, really weak, really feeble bounce, and I think now we're almost there. So especially if we break below this July 24th lows, new lows are almost a guarantee. By extension, we're looking at gold. Gold divided by US dollar, so XAU USD. As I just showed, dollar is getting weaker, smaller. XAU divided by USD, the lower part of this equation, US dollar, just got smaller. Gold made a new record. It made sense, makes sense. So if the lower part of the equation gets smaller, the top pulls it higher. So record highs for gold, we are holding indeed. Gold, we're holding gold miners. Let me just show you how to buy things like gold. And this is a weekly chart, so longer term. So the initial breakout occurred back in 2023 January, and this is all we do. We just look for a close above the blue line, pull back towards the blue line, close above it, pull back towards the blue line, close above it. So basically this is it. And the latest opportunity was back in over a year ago in February 2024. So right now we're again at record highs. I would be sitting in the position doing nothing. Gold miners, GDX outperformed obviously gold. This is a previous all-time high occurred in September 2011. We're way blew right past it. There is a little bit of a gap here for between those weeks, so we could be approaching potential highs, but for now I'm seeing very strong security that if we get a pullback should still be considered in an uptrend, but for now we're just sitting. So again, notice this upward facing arrows, basically opportunities to buy anytime we touch the blue support resistance line, which you can find out more by going to the description link in this video, MasterChartsTrading.com. So there's the gold miners at all-time highs. Latest opportunity to buy was back in May of this year, so hopefully you went ahead and bought. Interestingly enough, we're seeing also a rally for bonds. So this is a 7 to 10 year Treasury bond fund. We can look at it from the more longer term perspective, and these are actually multi-year highs. So this is 3+ year highs. Last time we were at this level was in 2022. So 3-year highs for IEF, also known as 7 to 10 year Treasury bond fund. By extension, TNX, the 10-year Treasury note yield, has moved in the opposite direction, whereas IEF, the bonds rallied. TNX, the Treasury note yield, dropped. Now, there are several things important on this chart, so let me just kind of go over them. So for a very long time, the 10-year Treasury note kind of hovered around this blue support resistance line, going back and forth, back and forth. That's about 4.36%. Until finally, right there where I'm hovering, on the 1st of August of this year, we finally got this massive, strong selling. And we actually broke below those previous lows from July 1st and made a new low. So this was important to make a new low. We got a small bounce into 18th of August area. And then again we got sold. And finally, yesterday on the 4th of September, we saw this break below this previous lows from 5th of August and from the 1st of July. And then to my subscribers, I actually wrote here new lows likely. And then today immediately we got gapped down and we're basically down to this red support resistance line, which is around 4% or so. So a 10-year Treasury note yield is currently hovering around 4%. The way things are going and the way things I'm reading in the Wall Street Journal, looks like the Federal Reserve will indeed lower interest rates, but I think the market is already doing it for us. So we are already seeing lower interest rates. For whatever reason, the market participants have decided to do so. So important thing, we are indeed long Treasury bonds, IEF for example. Notice again opportunities to buy right around the blue line. So if you are trading this, then you are already nicely in a plus. Now with Treasury bonds, you can't really make a lot of money with a small account. This is more to park your money for longer term trades. Here's a very important chart. What I think is a very important chart is for a long dated Treasury bonds, ticker symbol TLT. So notice what happened today. We gapped above this red support resistance line. So let's go to TYX, also known as 30-year Treasury note, Treasury bond yield, and notice that it has been decreasing. So we now have this potential support area for 30-year Treasury note yield. That support area is right around 4.7%. And if I am correct, and I think I am correct, I think TLT, the Treasury note bond, Treasury bonds, the longer dated ones, I think will continue higher. So if that is the case, even the 30-year Treasury bond yield will break down below this level, you know, from the July 1st lows, but I think it will continue lower and possibly towards like 4.3% or so. So let's see what happens in the next few weeks to days to weeks. Okay, and let's look finally at a recent trade that we did here at Master Charts Trading. So this trade is for Alphabet, also known as Google, ticker symbol GOOGL. How do we trade? So in this case, Google actually went below the yellow line where I'm hovering on 28th of March, meaning that it has entered a downtrend, or at least a avoid phase. Like, I wouldn't want to buy it at this point. I only want to buy stocks when they are going up. And how do I know they're going up? This is what happens when we see an actual breakout above this blue support resistance line, which did indeed occur just recently on July 14th of this year. I actually went ahead and I sent out alert to my subscribers. And notice what happened. Basically, we closed above the blue line and continued higher pretty much non-stop. A couple of days ago, we saw a decision by the courts to not punish Google too much, and it gapped even higher. So right now we're plus about 27% for this trade, and I would continue holding. I don't think I want to get out of this trade yet. So if you're a subscriber that recently bought Google, big congratulations, and I would continue holding this security. All right, head over to MasterChartsTrading.com, click on sign up. So once again, I have two products and one product bundle. Trading indicators are these lines on the chart. So for example, for this Google trade, we used my indicators, this blue support resistance line, which you can have for TradingView.com. All you have to do is sign up on TradingView.com for a free account, and then come back to my site, Master Charts Trading, and sign up for my indicators. So trading indicators. So they're available on monthly plans. They're also available on yearly plans, and you get a 20% or 17% discount rather. Newsletters. So I send out daily alerts about various securities that we trade, as in, for example, Google. Yes, indeed, this was sent out on 14th or 15th of July. And notice the security went up 27%, so congratulations. I also send out weekly members-only videos about the various securities, so this week we will be covering all of these stocks and ETFs. And the best deal, of course, is to get both trading indicators and newsletters, which means that you will get both, you know, how the tool, how to actually open and close positions, as well as my ideas about which securities to trade. Best deal is to get the yearly subscription, but the monthly subscription is also available. All of my subscription plans come with free 7-day trial, so you have a chance to cancel, but most likely you won't, because it's so useful, especially the indicators. I'm getting this all the time. People are just in love with the indicators. All right, that's it for this week's recap. Please let me know if you have any questions. Don't forget to hit the like button, subscribe to this channel, even put a smiley face or a thumbs up into the comments section on this video. I would really appreciate it, and Google, or rather YouTube, will also rank this video higher so more people will see this video. That's it for this week's recap. Thank you for watching. Have another great trading week. Bye-bye.